Yo, guys, today was really bad in the market today. All my favorite stocks literally hit new lows today. American Tower Corp, I love this REIT, and it's at an all-time low. Crown Castle all-time low. Prologis, man, one of the largest REITs. I've never seen such a big red candle in one day. Prologis down 5%. Like, what changed today that we didn't already know yesterday? Look, the market just closed 2 minutes ago. And man, look, Extra Space Storage, my largest holding, and my portfolio is down, man. But look, on the bright side, at least one stock was up that I own, and that's Enphase. Even though it's not up much, the past 3 days have been okay. But 4 days ago, it just hit that 52-week low. So yeah, man, so many stocks are like crashing today. So I'm gonna go over a couple that you should probably buy. These are at great buying points. All these are such good deals. And as a dividend investor, I'm so excited because I have some cash sitting around. So I'm going to be buying up all these favorite stocks in the past week or two. I hope these deals stay here for the next couple weeks because you can get some insane dividend yields for the longest from some high quality companies. You can get a really good dividend yield for so long. So yeah, let's just go ahead and look at a few dividend stocks that I would consider picking up. And well, the first one I'm going to talk about is American Tower Corp. Wow, look at this. It's at $169, a 3.7% yield. Now, I used to buy this when it was at a 1.8% dividend yield, and that was like so long ago. But what I wanted to show you is the core FFO. I'm going to be really quick with this because I'm going to go over so many cool stocks today. So the core FFO is $1.21 billion. How much does their dividend cost them? Literally only $727 million. Come on. They got so much room to grow it. And look, they have been growing it. Look, they almost grow it every single quarter. So it's pretty crazy to see. And that's why American Tower Corp is definitely on my watch list because I'm going to be definitely buying this stock in the next couple weeks. Yo, just wanted to show you guys, look how bad today was. Teladoc is at a new low. Anyway, let me go ahead and show you the next stock that I wanted to show you guys. All right, so guys, the next stock on the list, dividend stock, is ticker symbol NKE or Nike. So you probably didn't know this, but they're close to that 52-week low level back at $81, but they're at $91 right now. Market cap of $140 billion, and the yield right now is 1.49%. Let me go ahead and show you some numbers right here. So net income of over $1 billion still even right now. But look at their operating income or operating cash flow, 2.25 billion. Let's see how much their dividend cost them. A lot of people don't know this, but they do a ton of stock buybacks too. So their dividend only cost them $524 million. They have double that in net income. And look at their retirement of stock. They've been buying back over $1 billion of stock every single quarter. That's more than they pay out in dividends. So that's why I really like Nike, and I think it's underrated. People don't know that they've been doing those kind of stock buybacks. So I really like Nike, and they're at an attractive price right now. All right, so guys, this next stock I wanted to show you is one of my favorites, and it hurts because I own a lot of this stock and it's down right now, but it's all good because I'm not down too much on it, and I've diversified. So look at this. This is Extra Space Storage, all right? And I'm going to show you some numbers that makes this stock look really interesting, and I really like this one for the long term. So let's look at their operating cash flow. This is the number that they pay out their dividend with because it's a REIT. So 347 million, slightly down from 1 year ago. But that's okay because their dividend only cost them $218 million. So they definitely have some room to grow that. And as you know, REITs have to pay out 90% of their taxable income, and they occasionally buy back some stock, but it's not huge. As you know, REITs always have to issue shares. Like if you look at Realty Income, like the video we made yesterday about Realty Income, their total common shares outstanding goes up so much every single quarter, when from this one is basically flat from 1 year ago. So when REITs aren't issuing a ton of stock, that's a really good sign. And I like to buy those kind of REITs, and that's Extra Space Storage. And yeah, the stock price isn't looking too good, as you can see right here. And it's still up from the pandemic. Look at that. This was a huge grower. This went from $100 to $208. This was one of the best performing REITs of all time when it was up like that. But now it's at a good buying opportunity if you wanted to pick some up or at least have it on your watch list as a good dividend payer. Or if you don't want to buy, a certain REIT, you can just buy ticker symbol XLRE or VNQ if you wanted to get the Vanguard one. But look at this. These are basically at that 52-week low level or very close to it. And you can basically just get all the REITs and get a yield of 4.84% for a small expense ratio of 0.12%. So hey, that's another way if you wanted to be less risky and not individually pick certain stocks. All right, so for the next stock on the list, it is ticker symbol UI or Ubiquiti. So you may not have heard of this one. They just reported earnings a little bit ago. They beat earnings, and then just because of market volatility, they're below that level. So they have a market cap of 8.81 billion. And look at this chart right here. They're basically at the low of 2020 COVID pandemic levels. So let me show you a little bit of their stats because they're not that bad when we go and look at it. This one is the insiders own 93% of the company. So that one's a little bit risky. And for that reason, some ETFs don't really hold this. A lot of institutions don't buy this. But let me show you some of the stats. So they have net income of $103 million. Let's go look at how much their dividend cost them. It only cost them $36 million. So that's not too bad at all. And if we go ahead and look at their total common shares outstanding, it's literally flat from 1 year ago. They haven't really raised it pretty much at all. So that's pretty cool to see. This one you could potentially add to your watch list. They have good net income, good operating income. So yeah, this one could be a little bit risky. I guess all these are risky because they're at 52-week lows. But hey, usually the ones that pay dividends are less risky because they always know they have to pay a dividend soon. So they have to be very disciplined, financially disciplined. And that's what I really like. It makes these companies be more smart with their money because they know they got to do what's right for the shareholders. So the next dividend stock I wanted to show you is actually Hershey's, ticker symbol HSY. They have a similar, they're doing what General Mills is doing right now. So they're not doing too great, but they have a yield of 2.29%. And I really like this one because of their brands. And check out their numbers I want to show you. So net income 406 million, operating cash flow of 294 million. It's down from 1 year ago. I wonder why. But let's check out how much their dividend cost. $206 million, not too bad. Have they been buying back stock? Yes, they have. But weirdly, in Q2, they rose a little bit of stock, 6.83 million. But they bought back 224 million the previous quarter. So not too bad. Here's our total common shares outstanding. Well, it's basically flat from 1 year ago. Slightly down, but we'll just say flat. So look at the BDCs. Because BDCs kind of benefit from high interest rate environments, look at how Main Street Capital is doing. This is one of my favorite BDCs, along there with ticker symbol RWAY. But yeah, the BDCs have been doing great. This one still yields 6.88% and is close to that all-time high level. What happened with WPCarey stock? Look at this. It's down 8% today. What's it yielding? 7.28%. What just happened? Wait, did it just say WPCarey cut his dividend? Wow, they expect to cut their dividend. That's crazy. Let's look at their numbers. Could we have seen that coming? Well, no, they have some good numbers. Look at their operating cash flow, also known as a core FFO of 247 million. And let's see how much their dividend cost them. Oh, yeah, so they have a really high dividend payout ratio, 229 million. That's crazy. Looks like they've been issuing some stock too, but not too much. What's the total common shares? Yeah, it's gone up from 1 year ago, but not by too much. But yeah, that's crazy that they cut their dividend. I wouldn't even have seen that coming, but I guess it happened. So hey, you gotta be careful with some of these stocks, man. All right, so for the last stock on this list, it is ticker symbol ADC or Agree Realty Corp. Why is it down today? I don't know, because this is one of the best REITs basically of all time. Remember, nothing in this video is financial advice. I'm just some random YouTuber. But let me show you the numbers because they're so good. This one is a relatively smaller market cap. Look at how they're growing. They're growing their assets while lowering their debt at that ratio too. So it was 34%, now it's 31% with way more assets. So look at this. Their operating cash flow, the core FFO of $89 million. And if we see how much their dividend cost them, it only cost them $69 million. I really like ticker symbol ADC a lot. And that's the last one. They have really low debt too, only 31%. Very rare for a REIT. So yeah, if y'all did enjoy, please hit that like button for me and subscribe if you're new. We're trying to get to 1,000 subscribers. And if you look at the number, we're getting pretty close. And also check out these last two videos up here. And I hope you guys have a great rest of your day.